Hey everyone, Steve here from theturtlefollower.com, and in tonight's video we're going to take a look at a question that was asked by one of the free pass members on the difference between what I consider a momentum trade and what I consider a longer term trade. So typically when we take these trades for the model portfolio, we're looking for longer term positions. All right, we're looking for stuff that trades basically around the 50-day moving average. 50-day moving average is the average of the last 50 days. And we consider that to be about, where we like to stay around with our longer term trades. We're considering those to be, anywhere between a month to 3 month trades. Now, on the other hand, what I offer with the free trade idea or the stock trade idea every night is something that I classify as a momentum trade. And what I mean by that is the stock is showing signs of momentum. It's on an accelerated trend, and it's moving higher at a much faster rate than the 50-day moving average. All right, so here I pulled up a chart of UNH. Okay, this was the stock trade idea from last night, and you can see here on the right, on the long-term chart, all right, if we were to draw a trend line for UNH, we would actually be well above the 50-day moving average. Okay, you could see that right here with this rectangle. Okay, you can see that right here. Here's the gap between where our stop is that we classified last night at this 112 area and where the 50-day moving average is. So essentially, if you're taking it as a momentum trade, if you're taking it as a longer term trade, you want to actually make sure that you accommodate this 50-day moving average. So your stop wouldn't be here at 112.34. It would be down further, maybe here at 108.50 or even a little further at 106. All right, depending on what your system is and how you like to trade, this tight stop here at 112.34 may not be the best for your style and for your personality. Okay, but if we look here on the right, on the left, now this is a momentum chart, okay? And what that means is I'm using the 8-day and the 21-day exponential moving average, which means it puts more weight on the last few days of the average than it does, than it equal weights everything, okay? 50-day simple moving average, everything is equal weight. The day 50 trading days ago is the exact same weight as yesterday. With an exponential moving average, yesterday has more weight on the average than 21 days ago. All right, so ultimately with this, you can see that the stock has been using this 21-day exponential moving average as somewhat of support. Okay, so again, this one makes more sense. If you're going to trade it as a momentum trade, you would want to say, you know what, when it comes and falls below the 21-day moving average, then you want to make sure that you're out of the trade. Okay, so two different ways to look at it. It really all depends. Now, you can have, and the way I typically do for my personal accounts is you can have a longer term trade and a momentum trade in the same account. And what I mean by that is if we switch our chart over to, say, Disney. Okay, I bought Disney here on this breakout for my personal account on the 12th. All right, you can see this bar here. Now, what I did was on my longer term account, I put my stop all the way down here at 98. Okay, so I make sure that the stock would have to test the 50-day moving average, and if it did, that it would still be in my portfolio. I wouldn't want to get stopped out in a longer term trade until the 50-day moving average fails. That's just my line in the sand. It's arbitrary. Obviously, if there's trend lines or whatever, then those dictate. But now in the same respect, I also have a momentum trade in the account. Okay, and that momentum trade uses a stop of 102.84. Okay, because under 102.84, it's no longer making higher highs and higher lows, and the 21-day moving average is now starting to fail. So ultimately, you can have two different trades. It's just how you want to trade it. Now, if this happens to fail at 102.84, I will get out of my momentum trade and wait until either it sets up again for another momentum trade, or just wait until the 50-day moving average is tested to see if my longer term trade is still intact. Because ultimately what happens, if we look at another example in DuPont, ultimately, what happens is when trades fail, okay, and they're trading as momentum trades and they fail the 21-day exponential moving average, they fail, and they fail hard, okay? They've been going up based on momentum. Let's zoom in a bit, and you can see DuPont yesterday was actually using that 21-day as some support, ultimately broke down below the 21-day moving average, closed below it, and today gapped lower and kept going. Now on a longer term basis, again here on the right, there's nothing wrong with the uptrend, okay? You can almost make a case that it's coming into a good buy point. Now, yes, was this a difficult, 3 days to sit through, or I should say 2 days to sit through? Absolutely. All right, but ultimately your longer term trend is here. Looking back at DuPont on the momentum side of things, your longer term trend was the 21-day exponential moving average. As long as it stayed above that, you wanted to be long. It looked great at one point. Okay, look at how far it was, all the way above the 8-day. But again, once those momentum trades fail, they tend to be reversed pretty quick. Okay, so I hope that provides you with a little bit of sense of what I classify as a longer term trade and what I classify as a momentum trade. Now, typically when we enter trades, one last thing before I let you go here. When we enter trades, we don't classify the trade from the beginning, okay? For the stock trade idea, I do. But when we enter trade in the model portfolio, it's always based on a longer term time horizon. Okay, so this was a trade that we entered. We're in Home Depot, and we actually exited Home Depot. But ultimately, what we were looking at in Home Depot was this consolidation and trend line. Okay, right through there. Okay, so you could see much shallower trend line. Ultimately had the breakout, came back, tested the trend line in the 50-day, but then character reversed. All right, character changed in the trade, and it's all of a sudden it hadn't come back to this to the 50-day moving average that we typically use. So at that point, we went ahead and classified the trade as a momentum trade. Again, here's that same breakout level right through here. Okay, breakout. Here's the other trend line. The longer term trend line was right here. Okay, so ultimately then what happened is started trading above the 8-day, and then we switched what we were classifying as. All of a sudden it became a momentum trade. All right, so when you get in these trades, you don't have to necessarily classify what it is in the beginning. Just let it tell you what it is. Okay, and if it starts trading on momentum, starts trading above the 8-day, starts using the 21-day as support, then trade it as such. If instead you want to just always have that longer term time horizon and longer term outlook on the trade, then by all means go ahead and use a longer term trend line. All right, but ultimately, two different ways to skin a cat. It really depends on what you guys prefer. For me, I prefer both. I like to, see which way a stock goes. I like to get in off of the 50-day moving average, but I never know when the stock is actually going to go ahead and change character. And when it does change character, I change the way I trade it. All right. So again, hope that helps you guys. I know it was a little bit of a longer video. I know it can be confusing as well. So any questions or comments, please leave them below. If this is your first time visiting the site, please be sure to sign up for the nightly recap. You'll get all the future videos sent directly to your inbox. You could also go to the homepage and download a copy of the high probability setups. Okay, it's a checklist that I put together. And other than that, have a great rest of the night, and we'll see you tomorrow for another one. Take care, guys.